Hi and welcome to the Financial Fox. This is Steffi and today I will be joined by Michele Curtoni. Yes, he's Italian, but he's also head of strategy at the SIX Digital Exchange. And we are going to be talking about Web3 services and how it is important to start to think about an infrastructure and services for institutional clients. And this is what SDX is venturing in. Hi, Michele, how are you?
Hi, Steffi. I'm good. Thank you.
Okay, so I just wanted to talk more today about these Web3 infrastructure services that now SDX is looking to offer to their institutional clients. But perhaps you could start maybe giving us an introduction of what SDX is for the viewers that are not familiar with the company.
So I'm Michele Curtoni, and I work as head of strategy and head of business development for new business, really, what we call it, new initiatives and incoming initiatives at SDX. So what is SDX? SDX stands for SIX Digital Exchange and is a subsidiary of SIX, the National Stock Exchange of Switzerland. And we think of ourselves really in three big pillars, and that's kind of how we created and we run our company as well. So we have a regulated digital exchange, if you will, the first regulated securities exchanges in the world, as well as the CSD. Our CSD runs on blockchain, a private permission blockchain regulated by FINMA, and we obtained the regulatory license last year, September, for as an exchange and the CSD, running digital securities. We issued the first 150 million dual tranche bond, so we did a bond issuance between SIX, the traditional exchange, and SDX, the new digital exchange, in parallel, so 100 million digital, 50 million traditional. But then, as you said, we have a second pillar, which is the Web3 institutional services. I'm going to touch upon it a little bit in a second about our crypto really services. And then we have a third pillar, which is more of an exploratory business lines on how understanding how blockchain and DLT can support new business models. And we're looking into topics like art, digital art, NFTs, and carbon as well.
Okay, that's very interesting, quite forward-thinking, considering, a traditional institution that kind of SDX is, but it's breaking through different kind of interesting areas, isn't it?
We're trying. It's been a journey. So I think we tried from the hardest point. So building a regulated central security depository built on a distributed ledger. And we achieved a regulatory license for that, as I said, last year. But it was a few years in the making. And not only into the tech build, but also into the regulatory process to actually have an understanding at the regulator side that you can build a decentralized market infrastructure. And what does that mean? So we actually still fit within the old licenses, but the construct is so new that then FINMA created a new license called the DLT license as well in Switzerland, for which we're looking into that as well. We start decentralizing the kind of concept of a market infrastructure. So I think we started from that, which is the hardest bit to do, and now we are entering to service institutional clients in crypto because Switzerland is a very much forward-thinking country.
Okay, so there are a lot of live discussion about regulation, and perhaps worries also how regulation can be negative for the crypto industry, because it's going to add the limits, it's going to put barriers, and it's going to kind of in a way not let the crypto industry grow as it wanted. But at the same time, it can be very good for crypto, especially if we are looking at mass adoption. So you took this regulatory route very seriously. So tell me a little bit about how it's been working with FINMA, and also how regulation you think is critical for the development of the crypto industry.
Yeah, no, great question, Stefania. I think, look, each country in Europe, let's just focus in Europe, and UK and Switzerland has taken a different approach to this. So now MiCA is going to come, and the latest drafts are indicating a specific route of direction, but is nowhere complete if you actually have to mimic the same type of regulatory coverage that the financial industry has. So there is MiFID II and CSDR and all those kind of concepts. EMIR are not really replicated one for one into the crypto space, but MiCA and the marketing infrastructure for crypto assets is a step forward. Switzerland took a different approach. So Switzerland defined the crypto asset classes. You have asset tokens, you have payment tokens, including cryptocurrencies, you have utility tokens, and then started looking at actually the use case for each of those, and then allocating them to either existing licenses, for example, banking license, asset manager or exchanges, or then say you have to kind of abide to national law rather than new regulation that we're going to impose on top of it. So I think it's been quite an interesting approach, because to your point, sometimes regulation does create obstacles for for innovation, at least in financial services. But we believe that that a good regulatory framework is the only framework to have a good institutional adoption and have the evolution of the cryptocurrencies industry. Because if you start letting everything unregulated and really having a lot of question marks on who does what and who is kind of responsible for what specific business flow, and and then you're gonna get into the Terra and to the Celsius issues as all over the place. So where everything is decentralized and you have a protocol, but it's hard to track down actually who runs it. While in the regulated world as we know it, as I've always been working in, it's very clear who you can point a finger to, and that responsibility and the ownership and the rules and regulation, but as well as the kind of onus of really running and operating the systems are very clear, and that's what we need now in crypto. We're not saying that the crypto regulation are going to be equal to the previous securities regulation, but it's a step forward, and we probably need more of this step forward to really install a mentality of risk management. Really, that's important thing.
What about a regulatory? It's kind of like quite fragmented, this space, because
Yes.
you see Switzerland taking an approach. Then you mentioned MiCA, and then there is Dubai, then there is the US authority, and how you are thinking about this quite a fragmented framework. I mean, in the future, are we going to see more like a unified framework that everybody can operate internationally? Because nowadays it looks like you're trying to go to the place that is more regulatory friendly. So there is kind of like a competition between all these bodies, but at the same time, you're not going to be able, to have a client base that is actually international, and it goes beyond this kind of jurisdiction.
Interesting point. Cryptocurrencies are global by nature, decentralized by nature, and then regulation is national laws. Sometimes it's civil law, sometimes it's common law, and then sometimes you have unions like the EU, and then you have as you said, more forward-thinking or simply faster regulators. There's a crypto MTF in Abu Dhabi already, right? And but there's no such a thing anywhere else in the world. So there is such a thing as regulatory arbitrage. There always have been, right, in financial markets, but I think we're going to start seeing a little bit of that unification and standardization of approach in the European Union. I think there is an interesting angle that how the UK wants to play its role as forerunner of the crypto regulation. It's moving in that direction. Switzerland already taken this place. Abu Dhabi and Dubai are doing very interesting things. Singapore probably hasn't moved much from a regulatory perspective, and the US is probably taking the US approach, which is go big or go home, right? I don't expect a full cooperation of this is standardization of regulatory framework for cryptocurrencies, because it doesn't make sense. So today, how it's if you think about when traders and custodians move books around the world, to follow the sun in a way, you do it by having different accounts or different custodians in different local CSDs or different sub custodians. So you keep moving the book, and you have all the national laws, because each national law entry point, because each national law has its own specific regulation and KYC requirements and membership of different exchanges and CSDs and all the likes. So I think crypto will probably focus on something like that. So you will always have countries that are a bit more open and countries that are a bit more closed, each for their own reasons. But I think the important thing is that the industry builds a layer of risk management below that is probably more standardized rather than imposed by the regulatory angle. So that's kind of why even with our SDX, Web3 services, we try this, we're building this, and we have built a lot of these products already for an institutional angle, risk management focus, safety and security first kind of concept to mimic what we know already in traditional financial markets.
Okay, so before we go into the details of these Web3 services, I just want to kind of like list what are the new risks for investor. You are going to comment specifically for institutional investors in Web3.
So Web3, or really the distributed economy, is just a new paradigm, right? So from an investor perspective, and now you see different cryptocurrencies and crypto tokens listed on different exchanges. So first the research and understanding what's behind it and kind of the standardization of what assets am I really facing is kind of a big question mark, because you have exchange 1 and exchange 2 that might list specific tokens but have a completely different requirements. That's something that already happens today, and investors are quite savvy about who lists what. But if you actually do the comparison on traditional exchanges, you have a concept of IPO, you have membership requirements to even apply, you have listing regulators, and then you have kind of regulators like Prudential Authority in the UK, or the FCA or FINMA and SER in Switzerland. So you have all those things built, and crypto doesn't have any of that. So that's kind of put the weight of research back into the investor, and again, consumer protection kicks in, but that's again is a national story. But I think more from my perspective, in institutional side and banks and asset managers, the Web3 economy, it's so new from an operational standpoint that there's a lot of tech work and adoption work to be done to really get into that space. We started seeing a lot of hedge funds and VCs already buying governance tokens of DeFi protocols. So that has already happened, and that by the means of owning this governance token, they can control, they can vote and steer how these protocols are built. But it is a concept that a bank does not have yet, so they don't have that bridge into that. So that's why with kind of the Web3 services concept, we want to start building this type of infrastructure to allow for that transition, because all the risks to your question and all, there's quite a lot of unknowns. So let's try to kind of mimic and build something that institutional grade, infrastructure grade, risk management first type of concept, so that transition can be managed however each business model will allow to, because banks will not be the same in 10 years, and asset manager will be completely different, and custodians the same, right? So let's build the underlying services so that then each company can manage its own transition to Web3.
Yeah, and I think the term infrastructure is so important, because what we are missing is really an infrastructure and also set of standards that project and people and should kind of comply to and understand. That's the common base to work on. So maybe just go deeper a little bit into these Web3 services, and what are you focusing on with what are you specifically looking at?
We interestingly in SIX, we had a mandate by our board really to start looking into crypto a couple of years ago, and then in the meantime, of course, the market has been up and downs, and we were focused on getting the FINMA license for our regulated exchange and CSD for digital securities. But at the same time, we started building in parallel these Web3 services, and where they're focused, which we announced in June this year, is really a range of offerings conceived for institutional clients, as I mentioned earlier. We were going to start supporting really the adoption of financial institution to this Web3 transition, and there are two products that we're going to start with. So one is digital assets custody, which is again the core, right? Safekeeping and storage and show possession of digital assets and crypto assets in this case. And we have partnered with Fireblocks, and we announced that partnership a few weeks ago, and we're going to look to go live within the year, finger crossed, into the market with that offering. And secondly, and we're going to announce this very soon, but we're kind of already put a teaser out in the market, we built a non-custodial staking offering. For starting with Ethereum, ahead of the merge happening sometimes in September, we're really focused on building two things. So one is actually allowing our institutional clients to hold and safely secure these assets, at the same time generate yield on those assets where proof of stakes allow them to, and Ethereum is our first one. So this is kind of custodian infrastructure services and ancillary services. That's how I see staking to it. And then the next steps are going to be like going up the chain, a gateway concept, kind of brokerage systems and for accessing cryptocurrencies, and then definitely a risk management layer. That's also what an interesting project we're working on as well.
Interesting. And what about your approach or your intention to look at NFTs, for instance, which has become really popular? They are considered, an essential part of the Web3 economy. How you are going after them?
NFTs is such a fascinating concept. So we're working right now. We have a bunch of projects in there, a lot at the conception level rather than the building level, because it's a little bit far away from for institutions. This concept of NFTs. What I'm really interested in on NFTs, as you said, it is a new asset class. As we were saying this about Bitcoin in 2017, 2018. It is a new asset class. It might look like FX in a few years, but it's undeniable that it is a new asset class, and NFT, that's what it is now. So I'm interested in two things. One, the infrastructure behind it, because now we see a lot of unregulated exchanges or really marketplaces, let's be clear. And then you have creators, and then you have a flow into some custody angle, which sometimes is unknown, all the security and NFT changing time, right? So you might have the metadata changing, and there might be like bugs in the code. So there's a lot of open question on the NFTs, but I'm looking at the infrastructure perspective, and then I'm looking at the use cases. So there's a lot of institutional quote unquote use cases that are not simply focused on art or Bored Ape and those kind of things, but patents, copyrights, manufacturing, kind of processing, identity, KYC, all those use cases that can be represented by something that is non-fungible, relating to a metadata that can upgrade it in, can upload it up, upgrade it and change in time. However, you're still one owner, and you can create a one-to-one ownership vis-a-vis that thing that will not change and will always be yours and kind of be fungible across. So I think that's a very important thing, and we're starting exploring a lot of these use cases there. So just to recap, two things. So one is the infrastructure, how it's going to evolve, and what role can we play there, and then the use cases for our institutional clients and what can we do to influence and create a business case behind it.
This is great. You gave some interesting insight from what institution are looking at, which is the use case. So if we talk a little bit more about institution behavior and sentiment, is there any more insight that you can share perhaps on how they are looking at the crypto market right now? Because in 2021 was the year where, putting money from institution, everybody was excited. How they are facing this kind of bear market that it might gonna extend for a bit longer, and how has their behavior changed, and perhaps maybe their risk appetite or capital allocation? Anything that you can share here with us?
Yeah, and look, this type of institutions, another type of institutions. So if you think about the banks today, at least in Switzerland and most countries, they cannot actually have cryptocurrencies on their balance sheet, right? So they're all building towards it, and you've seen the market as much as I have, big custodians integrating digital custodians tools within their own core banking systems. You have a lot of interesting partnership with HSM providers and other big banks. So everybody's getting ready. From the trading side, I think there has been a lot of kind of agency trading in banks, and that will continue to go. And no matter what if the market is in a bull run or in a kind of a bear state, the banks will always, they will always be trading. So market makers also, that's their job. So you have the Jane Street flow traders of the world always there making markets, right? So that hasn't changed. What I know, and then you have like hedge funds and institutions that of that type that can access kind of cryptocurrencies, and then that's kind of why we're building the staking product, for example, because then they want to generate yield behind what they have, and they're holding for a specific amount of time. But in terms of what I see as the bear market reflection on the institutional side, is people now are focusing probably less of creating new ventures, but more building the infrastructure for the next phase. So that's kind of where I see it. People focusing on building the right things rather than going out and trying to surf the rising tide of Bitcoin prices.
Yeah, that's so right. It's like in the bear market is really the time to build. So just to wrap it up, in, I don't know, let's say maybe in 10 years time, how do you see the institutional market changing because of blockchain and crypto?
Look, I have a personal bet, and might not be well my company, but it's fully representation. But we're working towards a convergence. Okay, we're working towards the convergence of crypto and the securities world. So I do expect in 10 years that a bank can hold with a regulated institution in the same portfolio a crypto asset and the security, be that a private equity or a bond represented as a digital security. That's what we do at SDX. We launch a private equity issuance in digital form as well as digital bonds. So those are tokens, right, as much as cryptocurrency. So I do expect that converges from a regulatory perspective. So in Germany, for example, you have a concept of regulated crypto custody today by BaFin. In Switzerland, you don't. But I think in the EU or any kind of jurisdiction in 10 years, you're going to have that. So you're going to start having the equivalence of regulatory status, so that you can start converging, again, stocks and bonds and cryptocurrency. So it's not going to be very segmented from an infrastructure perspective, that you have a portfolio, then you have an allocation here, allocation there, but it's very hard to actually internalize and then see and have the one view of where your asset sits. But it's going to be simply one type of systems, because it's all token based, all digital ledger based, and I think that convergence is really going to happen, and that's kind of why we're betting. And if you look at SDX, how we're building, that's how we're building. So with the digital securities next to the Web3 services, so that they can merge at some point in the future. I think regulation will move towards that, because it's the only way that can make sense to me now.
Yeah, Michele, thank you so much. That was a really, really good conversation, and I kind of agree with all of the points that we discussed. So any institutions that, is watching and is interested to understand more about your Web3 services, how they can get in touch, where should they go to find more information?
Absolutely. So we have our website, sdx.com. If you Google Six Digital Exchange, you'll definitely find us. We have a dedicated Web3 pages and all the contact information there. We're on LinkedIn, we're on Twitter, and so we're out there. Talk to us. Happy to chat, and happy to showcase our product offering and to help this market structure grow.
Michele, thank you so much, and all the best with SDX, and I looking forward to speaking to you very, very soon when we are going to have more and more interesting things to discuss.
Thank you, Stefania.
Thank you. Okay, that was a very interesting conversation, and I know there is a lot to work on to get regulation right, to kind of like making sure that new services, innovative services are offered to clients, and institutions are a very important part of financial markets. So I'm really glad to see what SDX is doing. And if you have any feedback or any comment, please feel free to add them in the comment section in the video. And also you can reach out to me at steffi@financialfox.news, or send me a DM on Twitter or LinkedIn, and I will get back to you. I will see you next time.